Welcome to Impact Tech Studios, where we spotlight founders building scalable impact at the intersection of climate and capital. Today, meet Pradyot from Medius Earth, scaling large-scale nature restoration projects through digital MRV tech and institutional financing for carbon-positive outcomes. Let's dive in.
A pleasure to have you in my podcast. So, basically, I'll give you an introduction. So, we are Impact X Media. It has grown out of the idea of a venture fund that we are planning to build. This is a North-based fund currently because I am based out of North. But yes, we have done our first investment recently in a Bangalore startup. And from there, we have started looking at this podcast to become that initial understanding of who is the founder, what is his team, what is the business, and what do they do, how can we add value to your value chain, or we could add value in any other way, whichever is comfortable for you, right? So those are the things that are the initial thoughts that we enter this conversation in, and then it's a normal conversation, so you don't have to worry about anything. It's just a friend talking to a friend, and we'll just go to every point that you have been given. It's a very small thing that you will always see that the story always leads to all these points that have been given in the questionnaire. So happy to know that you are on our podcast. So I'll give my audience an introduction. So Pradyot represents Medius Earth, right? And that is basically helping. It's a social enterprise, and it helps sponsor social enterprise in terms of ecosystem building for water and every ecological problem that needs a challenge, that needs some funding to get some products to be out for them, and you become that channel in the middle, right? From a layman perspective, right? So you become that person who raises the funding for projects for social good, right? In a broader sense.
It's a much narrower niche than that.
Sure. So I would like you to give me an introduction of Medius Earth so that we are on the right track and we are moving in the direction. Right.
Yeah. So at Medius Earth, we essentially help develop large-scale nature restoration projects.
Amazing.
And basically, that primarily so far deals with land-based projects or large-scale projects,
Right.
primarily dealing with nature-based carbon removal solutions.
Right.
But in future, all of this can expand to other regenerative forms of interventions also, right? Which is where some of the ocean-based carbon removal solutions may come into play, or even water-based interventions that you described, or some of the other circular economy-based businesses may also sort of come into play. The core sort of binding thread across all of this are that these need to be projects that are net climate positive, net planet positive,
Right.
and have currently a mechanism to get invested in through private capital through the means of existing nature markets, environmental markets, carbon markets, and so on. Right. And one of the core sort of imperatives as part of or demand from these markets is that you need to have a very strong accountability in terms of outcomes. And that's what you get paid for effectively, right? So you need to have a very strong, what is a term that gets usually casually thrown around, MRV. So you need to have a very strong monitoring, reporting, and verification audit system in place to manage your operations.
Right. So that is where you come in and you become that process for them, right?
Exactly. So we
See,
primarily provide.
from what my understanding is that you also help them raise debt capital or which is stable capital for those projects to move forward, right? And these are nature-based regeneration or rejuvenation projects, right?
Right. So to an extent, so effectively what we do is we provide two primary services. One is the technology layer, which is the digital MRV layer, which is the core sort of platform or operating system on which the project runs, and then clear data integrity and transparency comes from that.
Right.
The other aspect of that is the institutional financing. Right. So when we are associating ourselves or partnering with any project, then we are essentially marketing it to institutional investors, and they would come in to invest in the project either in the form of a pre-purchase agreement or in the form of project financing, or it could even be equity investment. So the structuring can take many different shapes or forms on a project.
Right.
But essentially, it is institutional capital backing a planet positive project, which is being run on the technology layer that they're deploying.
Yeah, to ensure that stability reaches the project.
Exactly. And the main thing is that there are several actors nationally that are doing excellent work in various shapes of forms, right? But I think one thing generally lacking tends to be the scale of operations. The moment you start sort of scaling up beyond the sort of typical CSR or NGO project scale, you run into whole sorts of operational challenges, and your end outcomes are affected adversely as a result. So what you need to ensure is that you're able to have operational scale, which is backed well by a good sort of technology layer, which gives you an ability to monitor uh, operations, take corrective actions, and uh, also show outcomes in a credible and reliable manner, which is what you effectively get paid for. So your outcomes do have a value, and that valuation is determined by how transparent and high integrity are your operations. What is the quality of data that you're able to produce? I'll prove to the investors that yes, if you are claiming that you have removed 10,000 tons of CO2 from the atmosphere, then what is the uncertainty in that number? And then the lower the uncertainty, the better becomes the pricing. That's only one of the metrics of pricing, but yes, I mean, that's a very crucial part of pricing.
Right. So looking at that, so when you price the solution, you also look at the predictability of your platform also provides predictability to a project. You help them to understand what is their return from this, or what is the return from this project in terms of all the uh, impact variables as well as the revenue variables. Obviously, if you're getting equity, somebody is expecting some equity, some money back, right? Exit policy and all those things. So in that way, you are able to provide it in a structured way, right, through your platform.
Correct. So exactly think of it as a sort of hardcore. Uh, it generally gets termed as feasibility study for the project, but essentially it is your business model, right? Where you're looking at what are your sort of overall cost of operations, what are the key levers there, and on the flip side, what are the monetizable outcomes that you may have, right? So one simple form of monetizable outcome could be if you're growing trees, then you're able to sell fruits and get paid from those fruits. So those are like the classical traditional sort of revenue streams that most people understand. But the other revenue stream from that are the carbon credits that will get generated because those trees are going to store carbon in them, and so on. So what is the right kind of quantum as well as value of those credits that also varies into your business modeling aspects.
And the certification of those credits is what also you have tie-ups with for getting certifications as well?
Yes, that's correct.
Okay. And are these international bodies, or are you also using some support from India and then moving on to establishing something in the other countries where this carbon markets and certification is more evolved? How do you?
So almost all major carbon registries operational in the voluntary carbon market space are international nonprofits, largely. So that's where we focus on and work on also. Most of the people who work within the ecosystem in India are essentially environmental consultants that help you sort of prepare the documentation that eventually gets submitted to these international registries. Or in some cases, they are providing audit services to your projects, which essentially gets reported back to the registries.
So
It is important.
So yeah, sorry. So you were saying something. You said
I was just finishing up that thought to sort of close the loop.
yes.
Is that one thing to sort of note is that the national government has already announced Indian carbon markets. So there is going to be a national government-backed registry also that is currently being set up and is accepting applications. So that will become a very credible and popular source of project registrations in India going forward.
So in that value chain of getting value to your stakeholders, you're also first is measurement and certification, and then so measurement is done by you, certification is done on the measurement by an international body, and then you are also connecting them to the markets. So those certification partners you must be having, right? So they are those partners might be introducing you to the markets, right?
So yeah, I'll just maybe sort of simplify this whole
Yeah.
value chain, right? So essentially, as a project operator or the person who's undertaking any sort of activity on your own land or on your own premises, which is leading to, let's say, carbon sequestration,
Yes.
then you need to sort of create a certain set of documentation
Right.
and submit it to the carbon registry.
Right.
Then the registry asks for a third party audit. So you will have to appoint an auditor, which is accredited by the registry, and then they will come and provide an independent opinion to the registry.
Right.
Once the registry is satisfied with it, then they will essentially validate your documentation and say that now you are registered as a project.
Correct.
Once the registration is done, then you need to verify at regular cycles
Right.
the outcomes that you are claiming. So if I have sort of registered, let's say, an agroforestry project, where I've planted 10,000 trees,
Right.
at the end of every year, I'll have to then measure how much those trees have grown, how many have died, how many have survived,
Right.
and prove how much carbon dioxide they have sequestered.
Right.
Then the auditor will come and verify that. They'll submit a verification report to the registry. Once the registry accepts that, then they will issue carbon credits to you.
Right.
So now what you have are officially issued carbon credits in your account as the registry participant. And then you are free to monetize them by selling it to whoever the interested parties might be. So we also play a role in providing that market linkage.
Right.
Because in most cases, when we are talking about financing projects,
Right.
in a lot of cases at large scale projects, the financing starts almost in parallel with the registration process, because both of these are
Forward.
long time cycles.
I agree. Yeah. So on that, I agree because we are at a very good inflection point for this. India has the ecosystem growing at a very fast pace, and a very simple layman way of understanding if the ecosystem is growing is the number of amazing startups from the carbon credit side, an ecosystem of carbon credits is growing like leaps and bounds in India, and I am able to find a number of them working on that. Obviously, some people have the goodness of doing some part of it. So the in the value chain, so one of them is Renew Cred, if you know, right?
Yeah.
Abhimanyu Rathi from there is working on the audit side and creating those carbon credits and taking them to the market, right? So from the supply side, there is no issue. Supply side of carbon credits and getting into the certification part is very easy. The main part and the main game that has coming up is who is the buyer of those carbon credits and how to literally take those carbon credits once you've got them to the market, right? And what is that market and how does it look like? And are you going to establish a business in that market so that because the markets are right now not developed, but you are getting the carbon credits already certified, you're in the flow. Me being in the UK, just had a conversation with him and we came to the point that UK is already 53% of all carbon credits bought in the world are through the port which is called UK, right? Either through the ecosystem or however, right? There are some funds, there are some institutional alignment to the value chain, as well as there are some markets that are accessed by those legal firms and those auditors, right? This is where it comes in channels to every place. So 53% of buying comes to India. If you ever look at it, is 53%, right? So that is a big market, right? So from the buying side of the carbon credits is the value that you can always strive for, right? In the end, everything works from are you able to sell the carbon credits, right? In the end, it simplifies to that point, right? Otherwise, the projects and your aims and your ambitions are in the middle somewhere, right? So, what are your thoughts on that? So, with
So
that,
there is a lot of nuance to this.
Right.
And I think there are two dominant narratives that sort of play
Correct,
in the
correct. So
markets,
please give
right?
me those.
So, yeah. So one is that uh, there is oversupply in the world, and
Obviously,
then
there
there are
will
full
always be.
players.
There will always be.
But
And the supply.
the flip side of that, and the thesis for me to sort of get into this also was that uh, there is actually the oversupply picture is wheeled in a lot of layers, and it's the true supply or real supply of value
Correct.
is very, very little. So there, in
Right.
my mind, there
Right.
is really and sort of
Because time as
Second,
is a part. So in many of your projects, time is also a part that defines what is the actual value of carbon.
So even if you leave aside time, right, as a factor, when you just look at it from a macro picture point of view, right? I mean, overall, we are talking about having a global emission number of close to 51, $52 billion, 50 gigatons per annum.
Right.
And we talk about, as a globe, trying to get to net zero by 2050 or 2070, whatever that target may be, right? But within this century, right? So effectively, we need to go from emitting 50 odd gigatons every year to zero,
Right.
which means that you need to sort of have a balancing force somewhere, right? So, and either you bring that each of those emission numbers to zero, which means that effectively the best way to do that right now is stop all economic activity, because there is a direct
Either
master
reduction or offsetting, right? So either reduction at the source or offsetting. What else?
or you create a future scenario where we are able to say that, okay, 30 gigatons is going to be our annual emissions on a recurring basis, but there is going to be 30 gigatons of also removals, active removals every year,
Right.
right? So that is the supply number that we need to reach. Really.
Correct. Correct.
Right.
We should have
And-
ambition for that. The removal button.
And that needs to have real value, right? I mean, the only way it has real value is because everybody has sort of committed to this net zero narrative
Right.
to a large degree, right?
Right.
If that falls apart, then anyways, like, I mean, there's no like conversation to be had. But assuming that that is still the goal for humanity, then the supply needs to reach a scale of a few gigatons a year kind of a scale, so that it makes meaningful difference in terms of the climate movement. And the other thing is that it is also valued appropriately, which it is going to be. So from that point of view, now if you start looking at it, all the oversupply that we are talking about are essentially mitigation based credits, primarily in the renewable energy space, which already have started losing additionality, credibility. So they are not going to be further issuances in these segments anymore. So that supply cliff is very, very, very sharp. Right. And so most of the newer issuances, if you start sort of following market trends, are happening in either nature-based carbon removal space or in technology-based carbon removal space. And mitigation-based projects outside of renewable energy would be like clean cook stoves or safe drinking water distribution type of projects. Those are very, very small, right? I mean, so if you want to look at, say, the overall sort of supply picture globally, renewable energy projects would form close to 55 to 60% of the overall supply.
Right.
And then clean cooking solutions would form another 20 to 25%. And everything else would be a sort of fat tail, right? So if the renewable energy falls down, then supply is anyways constrained. But credible and higher quality supply, even within that, is next to negligible, to be honest, right now. Right. So more discerning buyers who are essentially institutional players, and they want sort of credits in the sort of volumetric range of anywhere between 500,000 to single digit millions every year.
Right.
For them, there is actually no credits to be had to a large extent. And what they are essentially doing is just taking up whatever is available in terms of poor quality, or even leaving them be and not sort of offset anything, because that leads them into reputational risks and challenges.
Correct.
So even though the dominant narrative may be that yes, there is an oversupply in the market and buyers are very concentrated,
Correct.
the sort of more nuanced view or opinion that we have actually is that there is a lot of pent up demand on the buyer
Right.
side, but is not translating into transactions because the supply credibility is not there right now. The whatever supply is there is not reliable and it's of poor quality.
Yes. So one is the reliability of the removal and offsetting numbers itself, and on the other side, it is also the way the measurement is standardized, right? So one more thing that I believe, am I correct or wrong? You have to just tell me. Is it also, obviously India is not right now. Do you see that there is lack of standardization of how you measure the carbon credits and value it and you put it on the paper is also one big issue, right now, which
Yeah.
is right now not solved. People are putting pressures on the government. Things are happening, but every private organization is having their own variables, how they check and what are those numbers, and they are just putting it on maths and taking it back to the data. But obviously, there will be some difference, right?
Yeah.
So that is a problem, right?
It is definitely a problem and it will take its own evolutionary cycle to actually get addressed and fixed.
As long as there is no regulation right now, you can still play. But after one regulation comes in, it becomes very fast. You just work from there and just make it a structured way of looking at it, right?
So that too, but I think like just sort of in most of these conversations, I feel there is always an inherent sort of double standard baked in also.
Yeah.
I mean, what is the objective behind all of this measurements and all? It is to prove that yes,
Correct.
you're trying to do something
Correct.
good, right?
Correct.
Which is
Right.
climate positive.
Right.
But the flip side of this is actually we should be measuring the opposite of this, i.e., we should be measuring how much damage are we doing reliably
Hmm.
to the planet right now,
Hmm.
not just in terms of CO2 emissions, but also in terms of
Right.
your biodiversity footprint, your land footprint, the other types of pollution that you are contributing to in terms of soil leachates, and so on and so forth. Those are also not measured the right way right now. So a lot of focus needs to be there in measuring the damage that we are doing the right way rather than this, because if you're able to
This deductive process coming from the other side will also add value to understand if
precisely,
it will be actually help it standardize even better, right?
so both the sides need to be measured using the same standards.
Yeah.
Right, what good you are doing versus what bad you are doing to the planet, both of those need to be measured on the same scale.
And what are you replacing? So you look at the current situation of that and just measure what is being, obviously that is the base of every calculation. So that also then tends to give you a little bit of a flow that, okay, even if the measurement and the reporting is different, you still have one result to reach, which can be understood by a large audience. Either it is India or is it any other country.
Yeah, definitely.
Right.
And because like psychologically what happens is that, and there's a very famous sort of saying that what you can't measure you can't change in a way,
Right.
but that's happening on the other side also, because we're not measuring a lot of damage that we're doing, so it just gets assumed to be zero pretty much, and we have no incentive to change that either, right? So some of these sort of developments around the TCFD or TNFD, which are essentially these guidelines or rules for public corporations to measure their sort of emissions and nature impact, are geared towards that, right? Because our accounting scales are massively flawed right now. We only measure in terms of monetary value, but the translation from all of these positive and negative externalities within the economic system don't get translated into numbers and get attributed positive or negative values.
Right. So if I were to talk about your product, and if you were to pitch to investment fund, right? If you were to pitch to a private equity fund, what would be your elevator pitch for it?
So we're essentially designing the operating system in the top form of technology platform as well as market linkage and financing platform for climate positive projects,
Right.
which will be investable through institutional capital.
Right. So give me some case studies of the highlights of your work till now, and how long have you been in the industry, and how has that been?
So we've been very young organization, about 4 years old now. The flagship project that we have is a what is known as an ARR project, afforestation, reforestation, and revegetation project based in Rajasthan in India, where we are going to be taking degraded lands, both public as well as private lands, and planting native biodiverse forests on them, or doing mixed agroforestry on private lands. And this is structured as a carbon project undergoing validation as we speak. And we are engaged with institutional carbon buyers as well as project financiers for that. And very recently, we have signed MOUs with the state government also to bring in convergence with existing government programs.
Right.
So just to give you a brief sense of the numbers, overall, we are talking about sort of targeting 30,000 hectares of land over a period of 7-8 years. And carbon projects by design are very long-term projects, right? So a typical duration of a project in this land-based restoration space tends to be 40 years or longer.
Yeah.
So you really need to have that long-term lens in looking at
And
it.
what is the kind of break evens that you anticipate for such projects? If, for example,
So these given
that's of impact
Rajasthan-
as well as in terms of financing, money part.
Yeah. So I'll purely talk about the monetary break evens, right? Because the environmental and social break evens are actually much, much, much better than the financial break evens.
Yes.
So the financial break evens could range in 10 to 15 year range for institutional guys.
Right.
And the 20-30 year IRRs are fairly attractive for institutional players.
Right.
But the challenge primarily is to get to that stage and scale, right?
Right.
Because any subscale project is not attractive enough. And people with a shorter sort of investment horizon time frames also don't like that, right? Because it's fairly long sort of payback cycle from that point of view. So it is really a product for large institutional patient capital, which tends to be insurance, pensions, sovereign wealth funds, and so on, right? But how do you sort of bootstrap your way into those eventually becomes the sort of whole play.
Correct. So, looking at these institutional investors in you, so are these India-based funds, or are these international funds? How is that structure? And give me some names or some understanding of what are those institutional funds like, examples.
So most of these are international, right?
Right.
Given that they've had the most amount of exposure to carbon markets, they have been operational a lot more there, and there is a clear sort of government and regulatory push also, which has sort of watered down in the last year or two. But the momentum still sort of continues to a certain degree. And it's going to be all of your sort of usual suspects, right? The largest banks, the largest sort of listed companies globally in any sector. All of those are playing in it. So you take like top 5, top 10 companies, listed companies in each sector, they all are operating in this already, right? And it is also thanks to the fact that both US and Europe have had operational regulated carbon markets for many years now.
Yeah.
And so does Australia, so does China. So a lot of developed economies already have operational markets. So most of those companies also have had experience in operating in the regulated segment also for a few years now. So it's the same set of guys who sort of tend to play in the voluntary carbon market space also. In addition to these large players, then there are a lot of sort of smaller players, intermediaries that have also sort of come in to be the bridge between sort of smaller projects and these larger guys. So they end up a lot of times either doing just a pure play brokerage work, or in some cases aggregation work. So they would set up platforms, funds, etc., to aggregate a lot of these credits from different parts of the geography, different types of credit classes, and then sort of provide that eventually
to
to
their
these
investors
projects.
to invest into, and those investors, so this becomes a channel for you. So how do you raise the, so this was my next question. So looking at the curious, I was getting curious about how you then reach to these institutional investors. What is that process of reaching to them? So how do you get discovered, and how do you reach out? How does that process work?
So this is all sort of um, the Wild West in a way, right? I mean, in the sense that I've operated in capital markets for several years before this, and so does my colleague also. So we're bringing in that expertise there to sort of establish partnerships, also sort of know what they need and talk to them in their language, but at the same time, sort of build the right kind of credibility and interest also, right? There are very few people who are able to sort of do that right now, just purely because of the fact that oftentimes they don't come from those types of backgrounds. And this is not a sector that has matured enough to be able to support sort of high quality talent that comes from some of these sort of institutional fundraising backgrounds also,
Right.
right? And that is something that we've seen helps differentiate us from others. But what works in other people's sort of favor sometimes also is that if they're able to find the right partners who can help them with the institutional fundraising process, then that can really sort of be a game changer for others also.
So you're very open. You're open for blended finance. You're looking at all types of finance. In the end, it needs to be structured in a better way and reaching you, so that you can support a large scale project. Right.
It has to happen that way. Yeah.
Right. And there has to be a channel for you, because otherwise, how will the regulation happen in the middle for that the money, clean money, reaches you? Right. That is another challenge. So you have layers of that. So
Correct.
either you introduce that layer in the middle, if that is an institutional investor. Has any institutional investor directly reached out to you?
Yes.
Okay, they have.
Mhm.
And you have become their organization of the thought and looking at the carbon credits. And have you been able to get the whole channel of funding for yourself uh, in an organized way, if you're getting my question?
Yeah. So all of this is essentially a lot of hard work, and it's like frustratingly slow also, right?
Right.
Purely because of the fact that this is still a relatively less evolved industry. So
Right. And so we're treating for a large scale project, right? So it's also a large scale.
So even for institutional capital owners, also this is relatively new, and they're all sort of learning on the job as well, the same way the sort of suppliers also are, right? So they're all trying to bring sort of the our own respective expertise to the process, and as the maturity level of the people gets better, deal making will become simpler, right? Because then there would be set precedents, etc., and so on. So it's the same kind of evolutionary cycle that some of the other infrastructure heavy industries have gone through, right? So the solar industry is a best case example for that. And then once the commercial solar got solved, then rooftop solar came in. Then like the road infrastructure development space also sort of took its own evolutionary cycle. So it's the same sort of learnings and structures and processes that need to get borrowed into our work also.
Right.
And I think the news flow sort of is indicating towards reaching some of the early stages of the maturity level right now.
Right.
But we still have a few years to go. Right. But typically sort of cycle time period to convert go from a lead generation to closing the entire sort of conversation
Hmm.
can, if you're very lucky, it will be 6 months, but it could be as long as 2 years also.
Right.
So depending on who you're dealing with and what's their sort of maturity level and so on.
Right. Right. So this is the only project that you're currently working on, or do you have other projects parallelly also in the works?
We have a few more projects in the pipeline as well, but this is the main, so the largest and the flagship one. But in addition, essentially, we have three different business lines, so to speak, right? So most or most amount of time we have so far spent on the carbon project development part, of where we are sort of developing these large scale projects. The other sort of two, the second business line is working with, again, corporates, institutions, um, to implement nature positive projects for them, measure outcomes as if they're carbon projects, but just they are all subscale projects. So it doesn't make sense to sort of register them and take the benefit of that.
Right.
So you could categorize them as CSR projects. So we are sort of implementing a few of those as if they are carbon projects. Again, lending our whole technical platform to those projects, giving them transparent sort of reporting in terms of outcomes, the financials, operational aspects, and so on. And then the third piece for us is to really help some of these large organizations that are a little bit early in their net zero journey to actually think through some of the strategic decisions and choices that they have to make in terms of how do they measure their existing carbon footprint, what kind of strategies should they be going for in terms of internal decarbonization, external strategies that they need to sort of opt for to sort of offset, and some of that, right? So we are advising a large mining company, for example, in India right now, on their Indian carbon markets entry strategy, right? How do they pay this now regulatory requirement that is coming in, and what kind of operational internal setup they need to be having, as well as what kind of resources they need to be planning to be dedicating to sort of deal with that. And could that be a winning strategy for them, or could they be first movers in that or not?
Right. So, looking at the current scenario, you are very hopeful of what the carbon markets are becoming. But obviously, when you started, your story must be a very future forward story when you started as a company and you were looking at carbon credits in India. And we want to build for India. Was that your argument? What was your vision to create this company?
So the vision really was to um, create something that restores lands, regenerates lands, right? Because effectively, one core realization
That small line
all
that
had
gives a very big impact, and the thought of it that it's so simple to understand, put simplification of that bigger problem that it solves, right? It's reduction, it's removal, it's the real thing that you need to work on, right?
Yeah, and a lot of us felt that during COVID periods, right? Because when lockdowns happened, suddenly you realized in most Indian cities, the bird activity improved, the air quality improved. People in Chandigarh were reporting seeing like Himalayas from their homes and things like that, right?
Right.
Which are things which, like, if you're someone born in like 2000s or even earlier, like, it's unimaginable to be able to sort of do that. Right? But said just a few weeks of lockdown, that's what it does, right? Effectively, nature has a very strong coping mechanism baked in. Natural processes are very, very sort of so powerful, but we are sort of hindering those processes actively every single day, right, through our actions.
Right.
So
Give me an understanding of what challenges did you face in building this? Lots of challenges for everyone. What were yours?
all of them.
All of them.
Every
Obviously,
imaginable-
your first is to scale, to start at scale, right? In a new industry that you're entering, for leaving your other work that you used to do for other organizations, right?
Correct. So it was a fair bit of transition, and the transition still continues, to be honest, right? I mean,
Right. That is an
that was going not at all.
What are those highlights of those last biggest challenges that you can talk about?
So one thing is that the whole sort of awareness and understanding of the problem is quite underdeveloped in my mind, right? So most people are not able to understand what you're trying to do because
The first point of contact is the way you reach the last
NGO.
maker. You are going through those discussions where the person who is at the first level and the challenge to the last level of that conversation, reaching a table, might be the problem that what you're trying to explain, right?
Ha, correct. I mean, so Yeah, you're right. I mean, just taking that as an example.
Yeah, because in the end, you're dealing with one person, whatever the scale. Actually, you're dealing with 1-to-1, right? So that is it. That is the risk aversion in your mind. But when you go in and you try to capitalize on it, you have to drive the learning from 0 to -1 to sometimes 0 and then 0 to 1. Because they have some traditional ways of offsetting, they have some traditional ways of CSR, they have some traditional ways of looking at this kind of a project buying, right? And
Yeah.
enter that process. So those kind of challenges.
And even on the other side, I mean, most of these factors that you've described are on the investment decision
Yes.
makers. And
Yes.
but on the flip side, when you talk about sort of actually executing projects, also again, people are sort of pretty much compartmentalized in their brains.
Right.
And then you need to sort of break those shackles and say that, okay, we need to actually do things a certain way because we want to ensure that 5 years and 10 years from now, this tree remains healthy and grows to a certain sort of size that our models are predicting it to be. All right.
Correct.
They think that they can get to that stage or not.
And building that trust
Just use beginning that.
building that trust.
Yeah.
So
Yeah.
right. How big is your team? How are you?
So we are about 11 full-time people now. And we have a lot of obviously people who are working with us part-time on the projects specifically that we are running as well.
Right.
And we have 3 active projects right now, many more in the pipeline. And we are constantly sort of innovating and looking at partnerships, finding the reliable, trustable partners, both on implementation side as well as on the financing side, corporations who are working with us. All of this is essentially just a discovery process where we find the right kind of value alignment and trust, right? Those two are sort of the core driving factors in any transaction for that matter.
So looking at your cash situation and profitability, give us some understandings of where do you stand as a company? Are you profitable? Are you cash positive? What is your stage?
So we are unit economics is always positive, right? But since we are in a growth phase, we are not net profitable because we are always investing.
That was not, yeah. So you're on the right game, right? So you're cash positive, basically. You're operationally positive. So that's a good sign of a business which wants growth. Right.
Yeah. And obviously, there are limits to how much more sort of you can pump in terms of borrowed capital or.
Obviously, any capital that you move in should also match your roadmap and your speed as well. So it can't be, it becomes bad money if you don't match with your speed.
So there is an optimal sort of growth rate that is there. We're not there yet, clearly. But yes, we are sort of moving in that direction.
So have you raised any capital till now?
No, we're fully bootstrapped.
Amazing. So how, so this bootstrap is by the co-founders? You've put your own money into them? Okay. Amazing. So are you looking for some funding? Are you looking for some growth? Is your numbers showing something that needs some pickup?
Yeah, for sure. I mean, always, right? I mean, the end state is obviously much bigger. But we're sort of looking for the right kind of partners also who understand this sort of journey well, right? Which is very hard to find, to be honest.
Yeah, correct. So on our platform also, people who are listening are from companies like Elevar Capital and Omidyar as well. So you will see that these people will see it, but obviously it is their interest and we'll try to reach out to them, but let's see how it goes. In the end, we are just a happy extended team for you. I have done a minor investment in, I'll be very open. So I've done a minor investment in Renew Cred, which I was talking about. That is why I was really curious about how this ecosystem now will work forward, because I'm always curious about it. If ever you want to get aligned with a similar guy who's a little different from your execution, obviously he's not taking natural rejuvenation and those projects at scale that you are doing. So you're handling that kind of value chain. So you're more scaled up than he is. But in the end, what he is delivering is also a way of understanding value, right? On every credit. So if there is a conversation and you see value in it, I would love to introduce you to that guy.
So you have to do. Are you talking about Bharat by any chance?
No, I'm talking about Abhimanyu. Abhimanyu Rat.
Okay.
I need.
Oh, okay. Same renewable guy. Okay. Yeah.
Yeah. So apart from that, there are a lot of ecosystem partners. So what I'll do is first I'll give you a friend request on LinkedIn, right? Then you will see who all I have interviewed. If you need to get anyone into the ecosystem that you see that you want to get introduced to, please reach out to me, and I'll just do that as a friend extended team. Apart from that, if you would like to put your presentation, or if you have something to show me, if you want to show something in the game and then choose who enters the conversation for you, you can also do that. I am a very simple guy. I don't spread it across in places where people are not interested in impact projects. So that is one thing. So it's your sign, your thing. What I have understood is you have some good projects, you have a cash flow, you are operationally positive, you are showing a good sign of growth, and you understand what growth should be. And patient capital is what I also believe in. So that is the only part of it. Obviously, technically, I would like to go into those learnings with you and understand how you are going through those processes and how you're getting those sales parts of it, and those that side of the game sorted. And then how is India adopting to the credit side and understanding how credits are. So the whole value chain is something I'm also learning on, right?
Yeah.
So apart from that, what I saw was that we have some ecosystem partners who are trying to build some carbon trading markets in India. So they have the access to it, and they are heading some organizations which are at the point where they are making introducing funds into India, which are hedge funds and all those things. So hedge fund guys from the markets are looking at building these on their own, and then getting it through the whole process of the government, because such people at that level are called as organizations. So you will see those in my network, one or two guys of that also caliber. So if you think that you want to have a chat with them, because they will show interest if they are interested in you, right? Because one of them showed interest in the other one, Renew Cred, right? Yours is a more executed and more stable, I believe, because you're executing it also, right? And you're having projects to show, right? And you're able to not say that, okay, I am out, so I'm getting the credits, I'm just not the middleman, I'm also the executor of that project. So you have a full structure of the thing that is happening. So if there is a case for it, would love to, right? So apart from that, happy to have you on our chat. Yeah. Not much to ask you. I have, so see, I got a technical understanding, a very nice understanding what you've built as a product. I'm really happy to see how Medius Earth is right now working on the real problem of the nuance of what carbon credit should be, right? In the end, there are a lot of companies which are just trying to define it, but you are trying to also execute it and show them projects which might become the way carbon credits are defined, right? Because you're able to control that whole value chain in the natural rejuvenation as well. So very happy to see somebody putting effort into that line of thought.
No, thanks so much for having me and being patient with this conversation.
No, I loved it. I loved it. It was why I go for these conversations is because I first wanted to go into impact courses, right? I said, why should I go for impact courses when I know that there are so many people working on it and I can impact them, and in the process I can learn. So that is where I enter this conversation. So this is my free education happening.
Yeah, no, that's a great strategy.
Amazing.
And yeah, thanks so much for extending a sort of hand of friendship as well. I'm sure that
So
we'll.
I'll just give you my friend request. Please use that, and I will introduce you to some people I feel should be connected to you. It is up to you how you take it forward, but it is always good, and you also know to say a yes and then understand and say no.
Yeah,
Right?
sounds good.
Yes,
Yes.
yes, yes.
Whereabouts are you, Arjun? In
So
the
I am right now based out of London,
Okay.
and I am also based out of India, because obviously I have my co-working spaces in India. So I have three of them in India, north of India. So Delhi, Haryana, and Punjab. So these are the three states that I have three co-working spaces in. And COVID was the one that made me come to this point that, okay, for me also, Impactex Media was something I was asking myself a question. A lot of negative in the news, a lot of negative everything. One Better India talking about a lot of things that might be very emotionally good for you to take. But nobody is taking the point of a business and enterprise entering into the positive of things and creating something meaningful. So why can't we become that positive information that actually when a person comes into those conversations, they also it becomes a free classroom for people to understand how people have built things. And that is what positivity I wanted to go into. So I became a student at that time. So I said, yeah, why not? So we started interviewing a lot of people, right? And this has become a very good scale now. So we are very happy to say that we're able to create value for others who are on the podcast, right? So we are able to introduce one person, Harish Hande, if you know. So he was on our podcast. I connected him to one Richa Pant, who is also involved in fintech training for villages. So she does those courses across India, and she has a very long experience of working in CSR for large organizations. She has handled that fund at a scale. So now she has started her own, and both of them were on our podcast, and we just said you both should talk. Exchange numbers. I felt very good that two people who are experienced in this zone are able to talk to each other, right? Then one of them we invested into. So Renew Cred came in, we understood their product. We thought, okay, this is a good number. And one of the investors I got with me was the guy who was very happy to create carbon market. So he was very interested in that. So that's why I was raising that for you also, because you align with that ecosystem in a way, which is kind of very positive. So he also invested with me. So then it became a story where I started saying that, okay, you come to the UK. I'll try to get you introduced to some 2 or 3 ecosystem guys who can get you into the ecosystems of any event and all. So introduced them to one guy in UK, right? And he introduced him to 5 events that he went to. Then he got a number of connects from there, and then he is now establishing his business in the UK as well. Because obviously the number was 53% of buyers are in the UK. The way that money is moving. So those kind of conversations happen because I become an extended team. So that is the impact that makes me happy. That's something that makes me really happy in that zone. So connect with me. Let's see how you. Let's be very open. So consider me as a friend. Just talk to me openly, and then we will work that way, right? Because you can call me Vela in the UK.
No, I think you should definitely. The reason I asked was one of my sort of business partners is based in UK, in London also. So you guys should catch up sometime.
I would love.
Find time. Love that.
Right.
He's a lot more experienced than I am in the space. So you'll obviously get a lot of good stories as well as learnings from him.
Amazing. I would love to get introduced.
Yeah, I made that connection. Yeah.
Right. So I'll just connect with you on LinkedIn, and it was a pleasure having you. Pleasure to know your story.
Thank you so much, Arjun. And yeah, great chatting as well. And have a great day.
Thanks, Pradyot. You as well. Bye.
Thanks. Bye.
You've been listening to Impact Tech Studios. Pradyot's blueprint for turning degraded lands into 30,000 hectare carbon projects shows how tech bridges execution to global markets. Subscribe for more founder playbooks on regenerative ecosystems. Connect with Medius Earth. Share this with your network and keep restoring with purpose.